In this special episode, we'll ask the question, is gold a better investment than Bitcoin? Right now, gold is entering a smart money sell area between 2014 and 2025. This is a very important technical level for gold to overcome. Is gold a better investment than the S&P 500 index? From 2010 to the current time, no it's not. The S&P 500 index is up 269.36% and gold is up 81.28%. The 5 years from August 2011 were absolutely brutal for gold. Then gold staged a recovery. What about if we go back to 1980 and we look at the relative performance between the S&P 500 and gold? We can see gold is up 559.85%, a pretty good effort, and the S&P 500 nearly up 4,000%. Was there any stage that gold outperformed the S&P 500? Absolutely there was. If you were fortunate enough to buy on the 21st of September 1964, gold would have outperformed the S&P 500, up 5,648% versus the measly 4,801% for the S&P 500. The reason I'm showing you these different charts, you must be your own financial advisor, or else you'll be at the whims and mercy of people that can distort price action. We never do that in this community, on this channel. We give you the tools so you can be more of a financial blessing to yourself and those you love. It's very important that you take control over your finances. In fact, I developed the CryptoTradingKS Masterclass for that exact reason, to put the hands on experience from more than 30 years in financial markets into your hands so you can do this kind of analysis yourself and do it at a very, very senior level. What about if we zoom back to May 1955? You can see the S&P 500 nearly up 11,000% and gold nearly 5,700% up. It really depends on the starting point of your analysis. Be very aware of charts other people show you. They may be creating story-based analysis, or SBA, which is a very, very dangerous thing to do, and about 99% of investors and traders, especially those on mainstream media channels, do exactly that. Before the CTKS method, people were using story-based analysis. They look at the financial markets from one particular story and make up all their conclusions based on that data. Unfortunately, SBA is the minor problem. RIP is the major one. Recent Indicative Price, or RIP, is what you see many leading stock market and technical analysts from Forex and also crypto doing. It's a completely flawed philosophical point when it comes to analyzing price behavior. They will just draw trend lines to the current price action, seeking to create a story from it. This is not the way professionals look at the market. Gold loves a drama. It loves problems. But one thing to note, when markets crash, gold crashes as well. Many people are led to believe the story-based analysis that gold can withstand market meltdowns. It cannot. For example, when we look at gold versus the S&P 500, we can see that the S&P 500, when it melted down in March 2020, took gold down with it. This caught many people by surprise. Gold was pretty much touted as a commodity that couldn't suffer any problems and loved issues, especially geopolitical tension and the world shutting down. Gold went on to rally. And it went on to rally very, very well, and then that caused a bit of a significant retracement over time because big gains need to be digested slowly. Typically, what happens when people see a sell-off in the main markets, they panic, and that means they sell their stocks, they sell their gold, they sell everything. It's just something to consider. Gold has been doing very, very well recently. The markets are definitely traders' markets at the current time. I've seen a lot of people point to this kind of concept, and I just want to explain it a little bit better. What you can see is gold coming up and up and up, reaching a maximum point, then coming down. You can see gold coming up, then coming down. A lot of people are pointing to these two peaks in gold. Are we there, or are we somewhere else? If you're a trader and not an investor, or you're a trader and investor, but more focused on the trading side, it doesn't really matter where you are, because you're making your three-dimensional decisions each and every day. What will you do with your particular trade or investment when the price goes for you, goes against you, or just consolidates and goes nowhere? That's what professionals do. Gold loves a drama, and people are pointing to this and saying, well, you know, gold looks a little bit overextended. I would like to just give you an alternate hypothesis here. If we look at this recent high, let's go back in price and try to find a recent high there or there. Probably that one is a little bit better. Price rallies substantially up, went parabolic. When things go parabolic over a particular phase of resistance, they do melt down over time because it's an unsustainable rally. Are we seeing an unsustainable rally just now? I believe we're probably more like this and more like this in terms of where we are on gold's price action. I think gold has a lot of legs to move further forward. Please let me know your thoughts in the comments. What do you think about gold and its potential move forward? As a former gold trader, I absolutely adore gold. Gold is just awesome. But I'm also into crypto. Well, in truth, I'm all in crypto, and I've left gold behind. Well, at least the digitized version I'm looking at through PaxG. I've totally left the stock market, totally left Forex, and totally left the commodities, and focusing exclusively on crypto. Now, why would I do that? Crypto is such a very volatile market. That's exactly right. That's why I look at it. Volatility is where the returns are. We can see Bitcoin currently trading at $30,036. This is at a very important structural level. Bitcoin needs to clear 30,166 to make its way forward. If it drops down below the 29,957 mark, it could be heading down towards 28,000. Just be aware of that. But if it heads up past the 30,000 mark, the next level is around the 32,200 mark. So we could have a good bit of price appreciation. And again, we always do three-dimensional decision making. We know what we will do with our trade or investment if the market goes up, goes down, or goes sideways. And in the last 24 hours, it's gone sideways. Many people have a particular way of thinking. You can be only one thing. You're just like a light switch. You can be on or you can be off. I don't subscribe to that limited way of thinking. I think you can be doing anything that you want. You can have gold, you can have Bitcoin, you could have silver even, you could have shares, you could have Forex, you could do whatever you want to do. A lot of people want to shut down free thinking and say you can only do one thing. You can do whatever you want. Do you want to hold gold and Bitcoin? Yeah, you can do that. Do you want to hold only gold? You can do that. Do you want to not hold gold or Bitcoin and just hold something like uranium or silver? Yes, you can do that, but don't hold uranium for too long. Again, I want to show you how people can distort different things. And I lectured first and second year statistics for many, many years, and I pulled this out and showed my students how the media can misrepresent things. What you can see here, and if we go back to about the 1st of November 2021, gold has been outperforming Bitcoin. Bitcoin came down about 51%, say roughly, and gold went up a little over 13%. So does that mean that gold has always outperformed Bitcoin? Well, let's check it out. If we go back to January of 2020, we can see a very, very big difference. Gold is up around 16% and Bitcoin a little over 222%. It really depends on what section of price action you're actually measuring. And I do Very deep dives on this inside the masterclass, which is literally 3 decades plus of knowledge transfer. What about if we look at gold and Bitcoin since around the 10th of March 2023? What do we see? You can see again, it really depends on where your starting point is. In this case, gold is up 8.14%, Bitcoin up nearly 48%. That's why I urge you to zoom out. If we look at gold versus Bitcoin in this particular way, we can see the appreciation in gold has not been as stable as the appreciation in Bitcoin. But this is simply not enough. You need a different way to look at this as well. One good way to do this is to take gold as a percentage of Bitcoin. And what does this mean? If the percentage is 1 divided by 1, which means gold is the same price as Bitcoin, the ratio will equal 1. If gold is 2 and Bitcoin is 1, that's 2 divided by 1, which is equal to 2. So when we look at gold as a percentage of Bitcoin, if you're interested in holding gold, you want to see this particular line go up and up and up and up. Measure increasing gains. What are we actually seeing? We're seeing the exact opposite. Gold as a percentage of Bitcoin. Bitcoin is absolutely crushing gold. So let's just zoom in to current price action. What we can see, the percentage, sometimes gold does better relatively than Bitcoin, but the long-term perspective is not that great. When we look at how gold was very, very good when Bitcoin first came out, of course, we can see that that's dominance has just not been kept. Gold as a percentage of Bitcoin continues to go down and down and down. What does it actually mean? Should you swap out of gold and get into Bitcoin? I don't recommend any of those things. I think that you can be in gold and Bitcoin and whatever you want to be, all simultaneously. Who came along and told you you can only have one choice? Well, that's a bit of mind control, isn't it? Why can't you choose both? One thing to understand, gold takes a lot of energy to get out of the ground. Look at these big trucks and all this manual labor that goes into open cut mines like this. We can see that it takes a huge amount of effort, a huge amount of capital, a huge amount of labor to get gold out of the ground. Now let's have a think about that. When analyzing gold companies, there's a thing called ASIC, all-in sustaining cost, and what we can see, the cost, the ASIC, has gone up and up and up recently, even though we know the price of gold has been doing quite well. Gold is continuously being pulled from the ground. If all the gold had been mined, there would be no reason to have gold mining companies. The total global supply of gold increased 2%. A lot of people talk about crypto miners and the enormous amount of energy they spend. Actually, when we do the statistics and we come at this from a purely objective perspective, Bitcoin mining is just a fraction of gold mining, and little wonder actually. Inside the masterclass TR11, we talk about Bitcoin energy usage, and the banking system is the major culprit. The banking system consumes much, much more energy than gold mining, gaming, Bitcoin mining, fiat currency printing, even Christmas lights. All of that combined just doesn't even get close to what is used from the banking system. But nobody talks about energy usage in either gold mining or banking, but just in Bitcoin. Why is that? Please let me know your thoughts in the comments. Gold is stored in the ground, and that ground belongs to different countries. This particular map shows you the countries which are the largest producers in the world as of 2021. China took out the #1 position, 332 tons, followed by Russia, 330.9, followed by Down Under, Australia, at 315.1 tons. Gold is held by central banks. When currencies become weak, they can use gold to prop up their own currencies, kind of like share buybacks in the stock market. When we're looking at the tonnage of gold reserves, North America takes the cake for the number one position, 8,133.46 tons in its gold reserves. Bitcoin is at its early stage of adoption, but we have nearly 1.6 million Bitcoin being held in corporate treasuries. It's on the balance sheet of a variety of differently publicly traded companies and private companies to the tune of $48.1 billion. There's currently only 8.24% in terms of supply in corporate treasuries of Bitcoin. It can be quite hard to visualize how much gold has been mined. The best estimates are currently 208,874 tons throughout the entire history of the world, with about 67% of that being mined since 1950. What is gold used in? It's used in jewelry, bars and coins. Of course, the central banks grab it. There are other uses such as technology. And there are also proven reserves. What are proven reserves? When you think about oil and natural gas, coal, fossil fuels, proven reserves are what can be taken out and actually converted into supply. A reserve is considered proven if it is probable that at least 90% of the resource is recoverable by economically profitable means. So this particular area, 5, on proven reserves, shows you that's the reserves, that's what they can get out of the ground. Trying to visualize the 22 meter squared cube of gold that has been pulled out of the ground, and you can see it's not the proven reserves. It's 22 meters or 73 feet by 22 meters or 73 feet, but it's not including proven reserves. This graphic is a little bit old, but it does give you a bit of an indication as to how large the particular proven reserves or below ground reserves and all the gold in the world is stacked up against each other. I'll just show you another shot. When we look at the physical size of gold compared to, for example, the Statue of Liberty, we can get a kind of an idea about how big it is roughly. And when you consider the size of the planet, that's very, very small. What could happen to gold's price if we actually colonize other planets? What would happen if we found a planet that was just made out of gold? To get a relative perspective on size, you can see that the USA, in terms of its reserves, is dominating the rest of the world. And this is still the case. A lot of people point to the de-dollarization and the increase in influence in China. And China did start out pretty small in terms of their actual reserves. And they have been growing their reserves quite substantially, but they've got a pretty long way to go. What we do with the CTKS method, instead of just making stories up about what we think, we actually look at what is actually happening. And we look at it from an unbiased and a biased perspective to neutralize out both. So we only look at reality. Looking at price action or stories like this just doesn't cut it in the CTKS community. We need to see the whole entire structure. Of course, at the end of the day, you must make up your own mind. Only you can tell if it's right for you to buy or sell something, to get in or get out of something. We saw the gold supply increase by 2%, but what about Bitcoin? Bitcoin's realized monetary inflation is currently 1.76%, and its forward inflation rate is 1.73%. What does this actually mean? Inflation makes everything more expensive because you need more money to actually buy the same thing. If we look at how inflation has changed the price of a cup of coffee over time, and this is from Investopedia, you can see it was 25 cents in 1970. Now in 2022, well, last year in 2022, it's $1.85. I don't know where they buy coffee, but from what I pay, it's way more than that. It's like $4.50. Please let me know, how much do you pay for a medium cup of coffee in your country? What happens when inflation gets out of control? It takes more and more and more money to buy what we used to buy with much, much less. Inflation is a very dangerous thing. Many people know this, but there are also some people who don't. Bitcoin has a maximum supply of 21 million Bitcoin. That's all there will ever be. The inflation will stop. It's actually going down and down and down, as we saw from that earlier statistic. Just like gold mining, Bitcoin uses a proof of work mechanism to actually create Bitcoin. But no matter how much effort or energy is put into the network, the same block reward comes out. This is unlike gold and unlike anything that has ever existed on the planet. It's a paradigm shift. And what you can see here, circulating supply is 92%. There's only 8% of the Bitcoin left in proven reserves. I really like tokenized gold, which you can get through PaxG. And of course, this is just what I do. You can do whatever you want to do. Always make your own decisions. Paxos is the issuer of Pax Gold. If you own PaxG, you own the underlying physical gold, which is held in custody by Paxos Trust Company. Paxos is a trust company and custodian regulated by the New York State Department of Financial Services. PaxG is the only gold token you can redeem for LBMA accredited good delivery gold bullion bars. Of course, you don't need to redeem it for gold, you can just sell it at any time. The question, is gold better? Is Bitcoin better? Is the S&P 500 better? The truth is, they all do different things. The one thing that you must keep your eye on are the smart money buy and sell levels, which can only be revealed through the CTKS method. If you want to know more about the CTKS method, which is a standards-based process to reveal smart money buy and sell levels from any price chart, please check out LV26 and LV27 inside the masterclass or go to the ctksmethod.org. You could look at gold with story-based analysis and RIP, but we don't do that with the CTKS method. Instead, we analyze gold from 1883 to provide these smart money buy and sell zones. You will typically see price ping pong between smart money buy and sell levels. It's a smart money buy level when price comes down and bounces up, and when price is going up to it, it becomes a smart money sell level. It becomes a little bit neutral when price is grinding higher, but it has to pass the smart money once sell level and turning into a buy level before it will typically go to the next one. So just bear these things in mind. Why do we actually want this? Why does it matter? Well, we're looking at gold since 1883, and what we can see, if gold can't bypass major selling resistance, it's going to come back into the next smart money buy area. Often we get retests. Just keep this in mind. This is a very, very important thing to understand. Typically, when price is selling down, what people will do, they'll just exit. They'll just say, no, I'm getting out of here. And sometimes that can be a good idea, but typically you get a retest. So just be aware of these retests. They occur with great frequency. I hope you enjoyed this analysis, and please let me know in the comments what are your thoughts about gold, the S&P 500 and Bitcoin. And please do not let other people make up your mind for you. You must be independent from the market. If you're not, you will be always subject to external influences. It is definitely a trader's market for the foreseeable future. If you're an investor and you're not sure how to trade, please check out the CryptoTradingKS Masterclass. It will give you a Rolls-Royce entry into what you can do with trading. And it's applicable to every market because we analyze every market, and that's what you must be able and capable of doing. If you're only in crypto and don't look at the main markets and don't look at Forex and don't look at commodities, you're making a huge mistake. All markets are intercorrelated and interdependent. To transfer 30 plus years of financial knowledge, I developed this structure inside the masterclass. And having positive excellence and real wealth before you buy and sell is a critically important thing to do. Your investment and trading mindset is either going to be your advantage or your problem. Your mindset literally determines your success inside financial markets, and it's typically the last thing anybody would look at. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.